Bitfarms has drawn renewed investor attention in 2025. Its stock is surging today, hitting new highs and drawing volume, largely because markets are starting to price in its pivot from pure Bitcoin mining toward high-performance computing, HPC, and AI infrastructure, combined with aggressive financing moves and visible project development milestones. The question for investors now is whether the surge reflects real underlying transformation or speculative momentum riding broader crypto and AI enthusiasm. To understand whether Bitfarms is a meaningful opportunity, let's walk through its recent financials, its strategic repositioning, what is driving today's move, the risks, and possible future scenarios. Looking first at the financials, Bitfarms reported first quarter of 2025 revenue of about $67 million, which marks a year-over-year increase of approximately 33%. But that top-line growth masks pressure on margins. Their gross mining margin fell to 43%, down sharply from 63% in the same quarter a year earlier. The decline reflects increasing energy, maintenance, operational, and network difficulty costs. Their operating loss for the quarter was roughly $32 million, versus a smaller loss a year ago, and net loss came in at approximately $36 million, or about 7 cents per share. Their adjusted EBITDA was about $16 million, or around 23% of revenue, much lower as a percentage compared to prior year levels. Liquidity at mid-May 2025 stood at around $150 million. In second quarter 2025, Bitfarms showed even stronger top-line momentum. The company reported revenue of about $78 million, an 87% increase year over year. The gross mining margin ticked up slightly to 45%, though it remains well below historical highs. Operating loss for the period widened to about $40 million. Included in that was a non-cash impairment charge and depreciation. The net loss was about $29 million, or 5 cents per share. On an adjusted EBITDA basis, the company generated $14 million, which is approximately 18% of revenue. As of early August, total liquidity was around $230 million, composed of cash and unencumbered Bitcoin reserves. Bitcoin earned in the quarter was 718 BTC at an average direct cost of production of about $48,200 per BTC. The company sold over 1,000 BTC in the quarter, generating about $100 million in proceeds, which it used toward CapEx, operations, and its Bitcoin One market operations program. Beyond the pure mining business, Bitfarms is actively reshaping its strategy, which is one of the central narratives behind today's surge. The company is pivoting to a hybrid model, maintaining its Bitcoin mining operations while converting part of its infrastructure into HPC, AI infrastructure, and data center capacity. Bitfarms has signaled that its US energy portfolio and land holdings suit this transition, particularly with the acquisition of power campuses in Pennsylvania via its stronghold acquisition, and the divestment of less strategic assets, such as one of its Paraguayan mining campuses. In April 2025, the company announced a private debt facility with a division of Macquarie Group for up to $300 million to fund initial HPC project development at its Panther Creek site in Pennsylvania. More recently, in October 2025, Bitfarms converted that debt facility into a project-level financing arrangement and drew an additional $50 million to accelerate equipment orders and civil works at the site. The company expects energization by end of year 2026. The Panther Creek campus is central to the new vision. Positioned in eastern Pennsylvania near existing AI data center clusters, it is intended to be a flagship HPC AI development campus. Bitfarms has partnerships in place, including with T5 data centers, to build and operate infrastructure there. Management has submitted a master site plan for the campus and anticipates that as AI infrastructure demand accelerates, this could become a high-margin, stable recurring revenue stream, offsetting the volatility of Bitcoin mining. Today's stock surge seems largely driven by fresh optimism around this strategy pivot, plus recent financing actions confirming that the pivot is being backed by capital. News that Bitfarms hit a 52-week high, stock trading near US dollars 5.66, underscores investor confidence. The conversion of the Macquarie facility into a project financing structure signals that lenders believe in the viability of the HPC transition. The draw of additional capital now to accelerate the build-out also signals conviction. Moreover, broader crypto and AI sector momentum is helping. Bitcoin prices, crypto sentiment, AI infrastructure demand, and news of miners being considered as energy, compute assets have all contributed to re-rating of mining names. An important analyst note from Bernstein recently suggested that large-scale miners with pre-secured power and capacity, like Bitfarms, may have advantages in AI deployment timelines. Another driver is that Bitfarms is selling portions of its Bitcoin inventory at favorable prices, generating liquidity to fund operations and capex, which mitigates near-term dilution or funding risk. For example, in Q2 it sold over 1,000 BTC at average, realized prices near the market to generate about $100 million in proceeds. Its reserves of Bitcoin and cash provide a cushion. Also, its balance sheet has strengthened relative to earlier periods. Combined with the liquidity buffer, the company is less immediately pressured to refinance or dilute. Institutional belief in this pivot is reinforced by their decision to convert the Macquarie debt into project-level financing and draw capital now. That move increases financial flexibility and aligns capital with project milestones rather than general corporate debt. It also sends a signal that the financing is tied to infrastructure development, which may reduce risk for lenders and investors. Despite the positive momentum, risks remain significant. The pivot into HPC AI infrastructure is ambitious and execution intensive. Building data centers, providing cooling, fiber connectivity, power reliability, deal sourcing, client acquisition, operations, and maintaining margins in that space is vastly different than mining. Delays, cost overruns, permitting or grid interconnection challenges could derail timelines. If AI infrastructure demand does not grow as fast as expected, or competition in that space intensifies, their turns may not justify the investment. On the mining side, volatility remains. Bitcoin price drops, increasing network difficulty, rising energy and cooling costs, regulatory pressures, and geopolitical risk can all compress margins. Bitfarms' mining margins remain well below historical peaks, reflecting that cost and difficulty pressures are real. If Bitcoin prices weaken materially, their ability to generate revenue will be impaired. Another risk is dilution and capital constraints. Although liquidity is relatively healthy now, continued expansion, capex, and project development will consume capital. If execution is delayed or revenue generation lags, the company may need further equity raises. Each raise dilutes existing shareholders, which is often penalized by markets. Valuation risk is also present. Much of today's run-up reflects expectations of future performance. The market is pricing in success in HPC AI deployment years ahead. If actual results disappoint, there is downside risk of multiple contraction. The stock may be sensitive to news and sentiment swings in crypto and AI sectors more than to operating fundamentals in the near term. To frame outcomes, consider these scenarios. In a bull case, Bitfarms successfully scales Panther Creek, wins large AI clients, produces stable recurring revenue streams. Margins in its infrastructure business exceed expectations. Mining remains profitable, and the stock re-rates aggressively. In that scenario, the equity could deliver multiple folds of upside from current levels. In a base case, the company achieves moderate progress. Mining remains a core income driver. Infrastructure builds. Slowly, losses shrink, cash burn is managed, and the stock delivers steady but not spectacular returns. In a bear case, challenges in project execution, cost overruns, subdued AI demand, or Bitcoin price weakness cause financial distress. Dilution accelerates, and the stock falls back toward mining multiples or worse. If I were deploying capital today, I would take a starter position sized for volatility. with the view that this is a multi-year speculative bet on infrastructure transformation. Key metrics to track each quarter include revenue growth, mining margin trends, Bitcoin production, and cost per BTC, progress on Panther Creek, permits, power, fiber, civil builds, equipment orders, client pipeline in AI HPC engagement, capital raises or dilution, cash burn, and debt or project financing updates. Only if those metrics trend favorably would I scale further. Given the risk profile, this is not for conservative portfolios or risk-averse investors. In conclusion, Bitfarms' surge today is not a random move. It reflects growing market belief that the company's pivot into HPC AI infrastructure is real, backed by capital, and time to ride converging crypto and AI tailwinds. Whether that belief proves justified or is just speculation remains to be seen, but for forward-looking investors, Bitfarms is now a name worth watching closely.